Hi, my name is Louis Mossman from KOSEC Kodari Securities, and today we'll be discussing the popular Fibonacci indicator used in technical analysis. This indicator is a tool used by the trading and investment team here at KOSEC and by other major institutions to better identify entry and exit points when investing in the stock market.
As always, all information given is just general in nature. It doesn't take into account your personal needs or objectives. For further information, please visit our website, www.kosec.com.au. Today we'll be discussing the following topics. We'll be discussing what is Fibonacci, how the Fibonacci sequence is calculated, what Fibonacci indicators are used for. We'll also be looking at the two most important technical Fibonacci indicators, the extension and the retracement. And finally, we'll combine the Fibonacci indicators with other indicators, so at the end of the day, we can make more informed investment decisions. To begin, Leonardo Fibonacci was a famous mathematician born in 1170 AD. Now in 1202, he observed a key ratio of numbers that is present in the world around us. This sequence is found by adding the two previous numbers of the sequence to form the next, starting with 0 and 1. The sum of 0 and 1 is of course 1, our third number. The sum of 1 and 1 is 2, giving us our fourth. The sum of 1 and 2 is 3, giving us our fifth, and so on. To begin, we'll be looking at the Fibonacci Retracement tool. Now, the retracement tool provides us insights into potential areas of support and resistance in the retracement of a price action after an impulsive move. Essentially, it gives us a level and a price that the share price might retrace to after that impulsive move takes place. A Fibonacci retracement drawn here from the low to the high would be from the start to the end of this impulsive move. Alternatively, you could draw it from the high to the low of a downtrending impulsive move. Once the Fibonacci retracement is drawn, we'll get all of these series of Fibonacci numbers that we mentioned previously. In particular, we can see the golden ratio 0.618. The 0.618 level would represent a 61.8% retracement of this total move, meaning this level here would be a 61.8 retracement. Another example would be the 0.5 level, which would instead be a 50% retracement. Now let's take a more practical example of how we might use a Fibonacci retracement tool. Of course, we can identify the beginning of an uptrend right here to the end of an impulsive move right here. Hence, we'd take our Fibonacci tool from the low all the way to the highest point of the move, and it would produce our Fibonacci retracement levels as seen earlier. Here is the 0.618, or the 61.8% level, which is also known as the golden ratio. The level is perfectly respected by the market here, causing the share price to bounce higher, and a lot of traders would be identifying this as a continuation of the uptrend after it uses that level of support. Now, alternatively, we can use a Fibonacci retracement in a downtrend as well. We can identify the highest point and the lowest point of this impulsive move to the south. Hence, we draw our Fibonacci retracement here down to here. This time, it is the 0.5 or 50% level that is well respected by the price action, causing the continuation of the downward trend. Next, we'll be looking at Fibonacci extensions. Now, extensions are used to indicate how far a trend will be extended after a retracement has already taken place. Hence, an extension will use 3 points. In example A, we can see the beginning of an impulsive move down here to the end of the impulsive move down here. We can see now that the retracement back has already taken place to our third point. Alternatively, the same can be said for an impulse move to the north with the start of the retracement drawn here, to the high here, and back to the retracement here. Once the Fibonacci extension is drawn, we again get the key Fibonacci numbers as mentioned and seen in the previous slides. For example, here is the 50% retracement and the 0.618% retracement. Again, this 0.618 level would represent a 61.8% extension of the initial impulsive move. Now, let's look at a practical example on using a Fibonacci extension. Here we've got the chart of Kogan.com, ticker code KGN. We can clearly identify the beginning of an impulsive move north here, to the end of the impulsive move here, and the end of a retracement. We hence draw our extension tool from the low to the high to the end of the retracement. This produces our key Fibonacci levels, and as you can see here, 0.618, the golden ratio, is used as a significant level of resistance in identifying how far this retracement and this share price movement is going to extend to. Now, of course, as the price action develops, traders add new Fibonacci extensions without getting rid of their old ones. So if this price action had already developed, this high, low, this high, and this low, we could draw ourselves a second Fibonacci extension. Now, as we can see, we have a 1 or a 100% extension line up perfectly with a 0.618, identifying that as an even stronger level of resistance, which eventually causes the complete reversal of the uptrend and the beginning of a new downtrend for Kogan.com. Now let's look at a Fibonacci extension using a downtrend. So we can clearly identify the beginning of an impulsive move here to the end of the impulsive move here, back up to the retracement right there. So 1, 2, and 3, producing our key Fibonacci levels. Now once again, 0.618, or the golden ratio, is used as a key level of support and is very well respected by traders with 1, 2, 3, and 4 candlestick wicks, using it as support, identifying that the extension of this downtrend has only been continued to the 0.618 level before buy orders pushed the price higher. Alright, now let's look at a more practical example of how we might use Fibonacci extensions and retracements to make a more informed investment decision. On this chart here of ARB Corporation, ticker code ARB, we can identify the clear impulsive move from the lowest point here to the highest point, just around there. First and foremost, we can see the 0.236 level is used as a major level of support, with the share price bouncing off it 3 times before continuing higher. It was also used as a level of resistance in September of 2020. Around here, we could glean from the chart that investors and traders probably don't want to push the price any lower than it currently is. We've also got a positive cross of the MACD and a nudging of the top Donchian channel, 2 further indications of the potential appreciation in share price. So let's just say we did enter into a trade of ARB Corporation at around this level here. We then want to know when and whereabouts to take our profits so we can maximize our returns but also minimize our risk. Hence, we'd like to know how far this trend is going to extend. Therefore, we take our extension tool from the lowest point of the impulse to the highest point of the impulse and back to the end of the retracement. Once again, we get our key Fibonacci levels. Now, we could have set our price targets or take profits at 0.618, the golden ratio, but at around the 0.5 or 50% level, we can see that there is a lot of resistance. We've got 1, 2, 3, and a 4th candle all struggling to break higher than this level. We've also then got 2 very bearish candlesticks, which pushes the price well below the 0.5 level. We've got a negative cross of the MACD, and the share price begins to approach that mid-Donchian channel. That would be a clear indication that the trend might be reversing and it might be an optimal time to get out of this business. This is a really tangible example of how you might use Fibonacci extensions and retracements along with other indicators to make that more informed investment decision to minimize risk and maximize returns. And this is what professional investors across the industry and here at KOSEC are doing every day.
In summary, today we have covered the 2 most commonly used Fibonacci indicators, the retracement and the extension, and how they might be used to maximize returns and minimize risk when making investment decisions. This technical analysis video was brought to you by KOSEC, Kodari Securities.